Hi, this is Patty and this is Andy from Farmers Insurance, and we're going to talk about insurance today. And Andy's, how long have you been doing insurance?
It's going to be 12 years in February.
Good, and you have your own private office here in Downey?
Correct. My agency is here in the heart of Downey,
So
right on Downey Avenue.
just 12 years you've been doing insurance here at this place, or have you?
I've been in the city of Downey since I started, but yes, with Farmers since the very beginning.
Andy looks so young, right? He almost looks like he's straight out of high school.
Well, I didn't grow, you know?
No, that's a good thing. Okay, well, our big question, Andy, today is what should a homeowner look for when purchasing a homeowner's insurance?
Right. Well, when you're purchasing homeowners insurance, right, you said the key word, homeowners insurance. Homeowners is the package that you always want to start off with, especially if you're a first-time buyer, right? And the reason being is the homeowners is pretty much the policy that gives you all covered losses. It's already one package that has pretty much most losses that the insurance company covers, as well as it'll cover your personal property against the same cover losses in any given loss, right? If you have to basically relocate because of that cover loss, you still have to pay your mortgage payment. But the beautiful thing about the homeowner's policy, it also gives you money so you can live in a hotel or rent another property. And then the added benefit is also liability. You have a dog, you bite someone slips, someone falls. Before you know it, you're getting served, right? California, it doesn't take a millionaire to be sued like one. Yeah. So that's the benefit of the homeowner's policy. It has all the key components under one package. Because a lot of the times, the mistake that first-time buyers make is, they're overwhelmed perhaps, right, by the cost of, all the new bills that they're going to be carrying moving forward. So they decide to go cheap with the insurance and go with maybe just a dwelling fire policy only, as because the bank really, all they really care about is a fire policy. And that's where you got to ask yourself, well, why is it okay that the bank just cares about that fire policy? Because realistically, if tomorrow the worst occurs, all the bank cares about is for the house to get rebuilt so it can get resold. The homeowners is what allows the new time first time buyer to actually keep that property in any given loss, because we're protecting basically everything that was inside of the home. We're back to, hey, they still got to pay their mortgage payment, so we're covering their new living expenses. It's much more complete. And then one of the bigger issues with the dwelling fire policies is that they cover only fire. 40% of claims, homeowner claims, are actually water losses. When a pipe bursts, yes, when a pipe bursts and it just floods the unit or the house with water, right? You got to think about all the damage that the water does to the flooring, to drywall, to furniture. The average water claim costs between $20,000 and $30,000, right? And I did have a situation where a client, bought a fire-only policy. They moved into their home. 2 weeks into their first home, a pipe burst. Before you know it, they're at a $30,000 loss because of the fact that this was a first-time home buyer. They put every dollar they had to close escrow, and given that loss, they didn't even have the money to pay for that loss. So where are those clients today? I mean, I do not know, but I know it did put them in a really bad situation. So that's why you always want to steer clear of fire-only policies and go with the homeowners.
So the way to go is to buy a homeowner's package.
Correct.
Right?
So, yeah,
as long as
and between a dwelling fire and a homeowner's package, you'll be surprised. It's usually a difference of $10, $15 max monthly.
So if you're only spending $10 to $15, you can save yourself a lot of money and a lot of time and a lot of headaches, right? Because
correct.
I'm pretty sure that if you have to go out and buy a brand new TV, brand new clothes, brand new bed, everything,
you can't do it.
There's no way.
Exactly.
There is no way. You're going to be at a total loss. Credit card.
Right?
Too many credit cards. Don't do credit card debt.
Right?
Yeah.
Okay.
Okay, thanks, Sandy. Thank you.